Doctor and all the audiences. Today I and Irfan will be presenting about the oil shock and the communities around 1970s until 1980s. So the first section will be presented by me, that is oil shock during 1970s. So what is oil shock in 1970s? There were two oil shocks during 1970s. The first one was during 1973 until 1974. The second one happened in 1979. A short brief of what happened during oil brief shock in 1973 until 1974 and 1979. The 1973 energy crisis, also known as oil shock of 1973 until 1974, was a period of skyrocketing energy crisis and fuel shortages resulting from an embargo by Arab oil producing nations in response to United States support for Israel during the Yom Kippur War. During the time, the price of a barrel of oil rose by nearly 4 times in less than a year. The embargo was lifted in early 1974, but the shock is largely regarded as a precursor for the rapid inflationary pressures and stagflation witnessed in the mid to late 1970s. The oil embargo of 1973 was just one of many complicating factors that led to a decade of high inflation and stagflation in the United States during 1970s. A second energy crisis arose in 1979, following the Iranian Revolution and the overthrow of Shah of Iran. The 1979 crisis, that is the second oil shock price in the 1970s, resulted in a widespread panic about the potential gasoline shortages and far higher prices for both crude oil and refined products. Oil output declined by only 7% or less, but the short-term supply disruption led to a spike in prices, panic buying, and long lines at gas stations. So what caused the oil shock in 1973 until 1974? The first one was the Yom Kippur War, which led OPEC to implement oil embargo to quadrupling oil prices from $2.90 to $11.65 per barrel. On October 1973, President Richard Nixon's decision to provide Israel with 2.2 billion USD in emergency aid in support of the Yom Kippur War, the OPEC approved an oil embargo on the US. This effectively shut off the export of Arab crude oil to the United States, followed by a series of steep production cuts in output. Before embargo, a barrel of oil traded for around $2.90, quadrupling to $11.65 per barrel by January 1974. This led to an increase in the price of regular gasoline in the United States from an average of 39 cents per gallon before the crisis to 53 cents in 1974, an increase around 36% in less than a year. In addition to rising prices at the pump, shortages ensued, leading to rationing at gas stations and long queues of cars waiting to fill up. This also caused psychological panic among the consumers who sought to hoard gasoline and related products, making the situation even worse. In terms of replacing Arab oil, the United States had little in the way excess capacity to boost production. Even with the rising oil prices, the time and capital needed to discover new deposits can take years. Ultimately, OPEC lifted its embargo in March 1974. However, higher oil prices persisted and leading to high inflation. The next one is the loose financing of the war in Vietnam. The Federal Reserve at the time, Arthur Burns, argued that this period of high inflation was a result of a confluence of several external forces in addition to the embargo, including the loose financing of the war in Vietnam, the devaluation of dollars in 1971 and 1973, the worldwide economic boom of 1972 until 1973, the crop failures, and resulting surge in world food prices in 1973 until 1974. Then, the extraordinary increase in oil prices and the sharp deceleration of productivity. So why did Arab prohibit oil exports to the US in 1973? The answer is to punish them. The oil-producing Arab countries viewed American political and economic support of Israel during the 1973 Yom Kippur War as siding with the enemy, and they sought to bring a punishing response. The OPEC also saw this as a way to exert influence over Western oil companies. So what happened? In the aftermath of the energy crisis, some began to argue that high oil prices led to higher transportation and manufacturing costs, even as people were being laid off in high numbers. However, critics of this hypothesis point out that other periods of inflation or recession that have occurred since have not been accompanied by an oil shock. This led to an unusual condition of rising prices along with an economic recession known as stagflation. So what was the 1979 oil crisis? So the 1979 energy crisis, the second of two oil price shocks in 1970s, resulted in a widespread panic about the potential gasoline shortages and far higher prices for both crude oil and refined products. Oil output declined by only 7% or less, but the short-term supply disruption led to a spike in prices, panic buying, and long lines at gas stations. The deeper understanding of this is the 1979 crisis energy occurred in the aftermath of the Iranian Revolution, which started in the early 1978 and ended in early 1979 with the fall of Shah Mohammad Reza Pahlavi, the state's monarch. Iran, a major petroleum exporting country, caused the global supply of crude oil to decline significantly, triggering noteworthy shortages and a surge in panic buying. Within 12 months, the price per barrel of this widely used resource almost doubled to $39.50. And then the US fiscal policy made the situation become even worse. In early 1979, the US government regulated oil prices. The regulator ordered refiners to restrict their supply of gasoline in the early days of the crisis to build inventories, directly contributing to higher prices at the pump. Another factor of unintended supply restriction after the Department of Energy, or known as DOE, decided to make a handful of large US refiners sell crude to smaller refiners who could not find a ready supply of oil. Because smaller refiners had limited production capabilities, the decision further delayed gasoline supply. And the second one is mandatory supply, leading up to crisis also seemingly played a role to a degree. The Federal Open Market Committee, or known as FOMC, was reluctant to raise target interest rates too quickly, and this hesitation contributed to rising inflation late in the decade. The jump in inflation was accompanied by high prices for energy and a range of other consumer products and services. So how did it affect Malaysia? Due to high oil prices, the inflation in Malaysia had increased significantly in 1973 until 1974 and in 1979. So this is the visual of inflation rate from 1960 to 2021. So we can see that this around this year, so this is around 1973 until 1974, that the inflation rate increased significantly high, which is the most highest in these decades. And then followed by here the 1979, uh, the inflation rose again, but as not as higher in the 1973 as before. So the next one will be presented by Ifan.
Let me intervene. In all this, you must elaborate how Malaysia and manage. What did Malaysia take the action to overcome the problem? Okay, in all your presentation, all the groups, for all the four groups, in any crisis, you tell the crisis, this is what happened, and then what Malaysia did to overcome. Okay, go ahead.
So my next, commodity prices collapse at Malaysia's 1985 and response. Next, British shocks in 1985. Malaysia, being an exporter nation, suffered as primary commodity prices fell and demand for manufactured goods declined. Malaysia overall export price index fell 30% as palm oil prices plunged. The major issue during the 1980 was the heavy industry program that the nation had embarked on. Heavy Industries Corporation of Malaysia Berhad was a public sector entity that was established to carry out heavy industry projects. The program then involved massive government expenditure, which was partly paid with petroleum revenue, but it was insufficient, and the government began borrowing against future oil revenues. The government had to embark on an austerity drive as a result of the ballooning debt from the heavy industry program. Malaysia fell into a recession in 1985 with its gross domestic product GDP contracting 1% that year. The unemployment rate rose to 5.6% in 1985 and 7.4% in 1986. The non-performing loan NPL ratios of commercial banks hit high of 30% in 1987 and 1988.
Okay, let me
The
intervene
government
just 1 second. Actually, contraction of 1.5%. In 1985, negative 1.5, not 1%, 1.5, negative.
1.5. Okay. Next, the government then embarked on a contractionary fiscal policy and devalued the local currency. There was also an emphasis on promoting foreign direct investment in the economy. For the financial sector, new prudential regulations were introduced in 1989. Next. Next, liberalization and export orientation. As Malaysia also relies on a few major primary commodities such as rubber, tin, oil palm, and petroleum. A downswing in the prices of these commodities has far-reaching repercussions on the economy. The prolonged global recession of the 1980 and the 1990 dampen the demand and prices for all Malaysian major export commodities. The oil price exhibit rather erratic movements in response to the world market price movements. The price dropped from an average US 423.95 per ton in 1984 to US 289.47 in 1985. During 1986, the price had dropped further to about 47% below the 1985 price, thus badly affecting the income of the smallholders in the settlement schemes. Next, Malaysia dependence on palm oil continue to increase as the returns from the commodity have been rather favorable compared to other industrial crops. Its annual value add increased by 7.9% in 1998, reaching US $1,394.74 million, securing a position as the single largest contributor to the total value add in the agricultural sector. Next.
Okay, the middle box, you see this slide in the middle just now, palm oil. Okay, the middle one, the oil price missing. I think you're talking about the palm oil price, not the oil price.
The palm oil.
Yeah, I thought they were talking about oil, oil fuel. This is palm oil. Okay, go next.
Next, privatization. Um, Privatization programs pursued by the government was to increase efficiency and competitiveness of the economy. In addition, it reduced the financial burden of the government, enlarged the role of the private enterprise in the economy, increase in productivity, and spur further progress towards the objectives of the new economic policy, NEP, especially the Bumiputra entrepreneurship, which has been its main objective. In 1980, in 1985, great steps on deregulation and privatization policy was taken up in order to enable private sector participation in economic activities, particularly in the development of infrastructure, which were once the domain of the public sector. Next. Next, the policy implication. Currently, the demand for Malaysian exports is high due to the competitive exchange rates, but the internal demand has been weak as Malaysian lost about one-third of their purchasing power during the recent currency crisis. Thus, at the macro level, the government has employed the monetary and fiscal policy to increase domestic absorption, such as the low interest rate policy. As long as it does not fuel inflationary pressure, the policy has been effective to bring Malaysia out of the recession due to the currency crisis as a result of globalization. On the fiscal side, the government also increased its spending on socio-economic projects uh, such as to improve the standard of living of the rural population. Next. So that's all from me. Thank you for
Okay,
listening.
thank you for your presentation.
By the way, there's one more presentation about the ringgit.
Oh yeah, yeah. I ask everyone who must do on it. Okay, go ahead, please.
So the next presentation is about what happens to ringgit. The draw of ringgit. The ringgit opened at its lower level versus the US dollar since the Asian financial crisis back in 1998, as more investors shift to safe havens due to uncertain global economic outlook. At 9:01 a.m. on Wednesday, September 7, the local currency had fallen to 4.5010 over 5035 against the greenback from Tuesday close at 4.4970 over 4500. So why did it happen? The ringgit ended lower against the US dollar on Tuesday, September 20, as oil prices declined, and the pressure was exacerbated by growing anticipations of an aggressive interest rate hike decision by the United States Federal Reserve on Wednesday, said
This
an
today,
NBC. Yeah,
today
it's
US
today.
time. Now it's a 11:36 Malaysia AM morning. It is 11:36 midnight, nearly midnight, at night in the US. So in about, in the morning, when I think 8 p.m. tonight Malaysian time, or 10 p.m. Malaysian time, we will know what they decide, when how much to increase the rate. So we're gonna wait about 6 hours from now. Okay, go ahead.
I see that. So does this happen to Malaysia only? What about the neighboring countries? The action taken by US not only affected Malaysia, but most of the countries are also affected by it. The following visuals will show the trends of the currencies in different countries. So we can see here that ringgit in August 22nd from here maybe 4.48 and increased to 4 point maybe 4.6 around here in September 19. Same goes from Indonesia rupiah. Here is 40,900 maybe 50, something like that, and then it went above 15,000 in September 19. And then the Singapore dollars. In August 22nd, it was below 1.4, and at September 19th, it was at 1.1 per dollar. And the Chinese yuan, it was at 6.85 in August 22nd, and it rose to above 7 in September 19th. So on the other side, in Korea won, in August 22nd, it was above 1,341, and it increased about maybe 1,391. And the same goes for the Japanese yen from 137.5 in August 22nd. It went to maybe 143 in September 19. So what industries can do? So what they can do is to increase their performances to meet investors' expectation. By doing so, investors will come by themselves to invest in Malaysia and can help ringgit to increase. So what is Bank Negara Malaysia plan? So Bank Negara MPC in its September 8 statement repeated that any adjustments to the monetary policy settings going forward would be done in a measured and gradual manner, while acknowledging that aggressive adjustments in the US interest rates as well as at other central banks are causing higher volatilities in financial markets, impacting major and emerging market currencies, including the ringgit. As Bank Negara Governor Tan Sri Nur Samsia Yunus previously said, a 50 BP hike will not be consistent with the bank's gradual and measured manner. The OPR is expected to reach only 3% by the middle of the next year, bearing a sharp slowdown in growth, even though the Federal Reserve rate will hit 3% this month. So what is ringgit's future? Ringgit value will continue to fall for now. The ringgit is expected to continue its fall in the near future due to strengthening performance of the United States dollar. Lee Hengui, executive director at the Socio-Economic Research Center, however, said that its drop in value would be temporary. Speaking to Malaysia Now, he said the ringgit would bounce back once the performance of the United States dollar begins to decline when the Federal Reserve slows the rate of its interest rate hikes. So the positive side of this, despite having depreciation in ringgit, there are also positive effects to the country. The first one is increase in exports. With the drop of ringgit, goods and services become relatively cheaper than before. The second one is more tourists coming to Malaysia. For example, the drop in ringgit value compared to the Singapore dollar will attract visitors from Singapore, which would provide a boost to the local economy. That's all. Thank you for listening.
Okay, thank you very much. Uh, you all of you must prepare questions for this group. I have a question. Number one, crisis, 79 oil shock, 73, 79 oil shock, inflation. So how did the government cope with that inflation? What did the government do in terms of monetary policy, fiscal policy, and other economic policy? There are three types of policy there that I'm asking. That's on the and on the ringgit, what can the government do? Yes, you mentioned about the Bank Negara. You must know Malaysia practices the independence of central bank. Independence. Central bank, Bank Negara Malaysia, is independent of the government. Like the Minister of Finance cannot intervene in Bank Negara's affair because Malaysia practices the independence of central bank. So monetary policy is set by uh, Bank Negara Malaysia. Interest rate, OPR, all those set by Bank Negara Malaysia. You see, very independent. But whereas economic policy is by the government. So all can play their role. I mean, each can play their own role. Central bank will do with monetary policy. Government will do with economic policy and fiscal policy. You see? Okay. Those are the questions. What can the government do? All right. Go ahead.
Okay, Doctor. For the question for the oil shock in 1973 until 1974 and 1979, the only possible answer that I can give you that is that there were two strategic initiatives undertaken by the government in 1974. Firstly was to incorporate a national oil company, that is Petronas, and secondly was to enact and pass the Petroleum Development Act in Parliament, which effectively vested upon Petronas the entire concession to explore, develop, and produce petroleum resources in the country.
Any other answer? What about to control inflation? What did the central bank do? That's central bank.
Increase the OPR.
Yep. And what did the government do? There was central bank, now government. Anyone can answer that?
Maybe giving the subsidies to the local companies to produce more.
I'm not sure
To,
about that. Any other answer? Anyone can answer? What did the government do? Guys, Aida, Nur Haida, Fatin, Nur Iza Sabrina, do you have an answer? What did the government do to tackle the problem of inflation because of the two oil shocks? During the two oil shocks. Any answer? What did the government do? We know what the central bank do, and you understand now from me that there is independence of central bank from the government. In fact, why it is independent? It is the good thing. Usually, poor countries or dictatorship countries will have, everything is under the dictator. Central bank he can have the money for himself. But in Malaysia, there's independence of monetary central bank from the government. And in fact, the establishment of Bank Negara was established by the Act, the Bank Negara Act 1958. 1958. Bank Negara was established by the mandate of that Act passed in the Parliament, Act Bank Negara Act 1958. And then the role is of Bank Negara is defined more, the role, by the Act of Bank Negara Act 2009, that gives the power to Monetary Policy Committee, MPC, Monetary Policy Committee, to make decision on monetary policy, on interest rate, OPR. Yeah. So the government, the minister, cannot pick up a phone and call. You must do this. No, no, no. It's independent of the government. So you understand that. So what did the government do? Anyone here? The government. Okay. Central bank is separate from government. Okay. Of course, they get the money from salary from the treasury, but uh, Bank Negara Malaysia does not report to the government. It's responsible to the parliament, I think, because it's act of parliament. Anyone? Okay, I give you the answer. Because of inflation, what is inflation? Too much money chasing after too little goods. So the government did the Green Book program, Buku Hijau, program Buku Hijau, to encourage planting of vegetables, planting of food. Not planting of food. Yeah, to reduce cost. To because people have to pay a lot more because it's inflation. Why not you grow your vegetables, sayur, loba, and so on. So the Green Book program for the people to grow their own vegetables and so on. Increase program for agriculture, because the more products agriculture will feed more people, and that will alleviate problem of the people to find food and so on. So one of them is the the Green Book program. Another one, huge campaign on hoarding, to stop hoarding. What is hoarding? Concealing products in order to get higher prices. What do you call this in Malay? You hide your products. By hiding your products, the products will.
Seruduk, Doktor.
Huh?
Seruduk.
Yes. Say it again.
Seruduk.
No, 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 no. Not Soloduk. Doesn't come to my mind. You hide your products. You don't sell it. What is it? Sometimes doesn't come to my mind. Shopkeepers hide their product, don't sell it. You go to the shop, do you have this? No, I don't have. Actually, they have it. What is it? Hmm. Okay. HORDING, hoarding. Okay. Sorok, menyorok. Menyorok barang. I was looking for the term, specific term, okay? Now I look at the dictionary. So there was a campaign, cegahlah komplot sorok. Cegahlah komplot. Like, you know, these people get together, komplot, sorok, sorok, you hide. So there was a big campaign in Malaysia at the time, cegahlah komplot sorok. Stop hoarding products, because these shopkeepers were hoarding products in anticipation of higher prices. When the prices go up, then they sell. But now you go to the shop, you ask them, no, we don't have it. Sorry, we don't have it. But actually, they have it in the back, in the store. They're just waiting for the prices to go up. Sorok, menyorok. Okay. Because the word is so special, the term. Hmm? You don't just say you hide, you know, sorrow. Okay, and okay, I want one of you to ask on the 1985 economic recession in Malaysia. What did the government do to overcome? Number one. Number two, as a result of that, as a result of the 1985 recession, what did the government do? Okay, I already asked you, so please answer. So one of you must be ready with one question, because I want to have a question from the students. So please answer my question on the recession of 1995. Because this is a very important point in our study. Because of 1985, this and this happened. Okay, go ahead.
In my opinion, the government can change its tax rates to increase revenue, or efficiently manage expenditure.
Any other answer? No. Uh, that could
Can I
be,
try the
yes, that could be possible, but not the answer. That, you reduce tax rate, yes. During the recession, yes, that will be good for it, to overcome recession, because people are not burdened, people can work, companies can start operating. Okay, that's possible. Okay, I'm not saying you're wrong. Okay, please go ahead. You wanted to answer.
so in my opinion, Dr. Maybe, in result of the commodity prices collapse, so the government learn a lesson from it and start to think to diverse their structure, economic structure, from commodity to manufacturing.
Yeah, I think that's the most important thing we must learn in our class. I mean, not the most, one of them. So how careful we speak, one of them, because there are so many. Yes, you're right. The word you must know, diversification, diversify. In the past, Malaysia almost completely dependent on the exports of commodities. So prices of commodities fell abruptly. So Malaysia learned the lesson. Should not put everything in one basket. Should not put all eggs in one basket. So diversify into manufacturing. As a result, also there was an act of 1986, Investment Incentives Act 1986, that signalized the change in the trade policy from this what import substitution to export promotion of manufactured uh, goods. So that was 1986. The trade policy change together with diversification change to export promotion or export oriented policy, with the policy of exporting manufactured goods. Okay, so we're done with this group. Thank you very much for yes, one the question from the student. Okay, please, all from me now, one from you, please. We are very tight on time. Please, quickly. Sabrina, do you have a question?
Doctor, I have a question.
All right. Go ahead, Iza.
How about the employ? I want to ask to the presenter, how about the employment rate at that time during this crisis?
Well, which crisis? 70s or the recession? Which one?
70.
70s. Okay.
Okay, thank you for the question. I would like to answer that. So, I did my research and I found that the unemployment at that time did not change that much. But I will share the statistic. Can you see my screen, Doctor?
Yeah.
So, as you can see here, during 1973 and 1974, the unemployment rate instead it decreased. So the crisis does not affect the employment rate in Malaysia during the crisis. That would be my answer.
Okay, thank you, Hanif.
You're welcome.
Okay, thank you for the group. Now we should move on to the second group. Please get your slides ready. Wait, wait for a second. I want to capture this. Uh, hold on. Okay, you can start.
Assalamualaikum and good morning to everyone. I'm Nur Sabrina binti Nazrin, membership number A186114. Today I will present about crisis economy time lapse from 1997 to 1998 to 2010. Okay. Asian financial crisis, which is Asian history from 1997 to 1998. The Asian financial crisis was a period of financial crisis that gripped much of Asia, beginning in July 1997 and rise fear of the worldwide economic meltdown due of financial contagion. The crisis started in Thailand with the financial collapse of the Thai baht after the Thai government was forced to flood the baht due to lack of the foreign currency to support its currency PEG to the US dollar. At the time, Thailand had acquired a burden of the foreign debt that made the country effectively bankrupt even before the collapse of its currency. In addition, as the crisis spread, most of South-East Asia and Japan saw slumping currencies, devalued stock market and other asset prices, and a precipitous rise in private debt. Indonesia, South Korea, and Thailand were the countries most affected by the crisis. Hong Kong, Laos, Malaysia, and the Philippines were also hurt by the slump. Brunei, China, Singapore, Thailand, and Vietnam were less affected, although all suffered from a loss of demand and confidence throughout the region. Foreign debt to GDP ratio rose from 100% to 167% in the fourth largest association of South Asian nations, which is Asian economies in 1993 to 1996, then shot up beyond 118% during the worst of the crisis. In South Korea, the ratio rose from 13% to 21%, that the as high as 14%, while the other not her newly industrialized countries fared much better. Only in Thailand and South Korea did the debt service to export the ration rise. Although most of the government of Asia had a seemingly sound fiscal policy, the International Monetary Fund (IMF) stepped into the initiate a to a 14 billion program to establish the countries of South Korean, Thailand, and Indonesian economies particularly hard hit by the crisis. The effort to the effort to stem a global economic crisis did a little of establish the domestic situation in Indonesia. After 30 years in power, President Suharto was forced to step down on 21 May 1988 in the wake of widespread raging that followed sharp price increases caused by a drastic devaluation of the rupiah. The effect of the crisis endured throughout 1998. In 1998, the Philippine growth dropped to virtual zero. Only Singapore and Thailand provide relatively insulated from the shock, but both refuse serious hits in the passing. The former more so due to its size and geographical location between Malaysia and Indonesia. By 1999, however, analysts saw signs that the economies of Asia were beginning to recover after the 1997 ASEAN financial crisis. Economy in the region are working toward financial stability on financial supervision. This is the Asian exchange rate using US from June 1997. You can see that on 1997 and 1998 is a down and drop surely. All the Asian countries. Okay, for the role of IMF, which is its International Monetary Fund, since their country melting down were among not only the richest in their region but in the world, and since hundreds of billions of dollars were at stake, any response to the crisis was only to be cooperative and international, in this case through the International Monetary Fund (IMF). The IMF created a series of bailout relief packages for the most affected economy to enable affected nations to avoid default, trying the package to currency, banking, and financial system reform. From economic reform, the IMF's support was conditional on a series of economic reform that statutory adjustments package, which is SAP. The SAP called on crisis-struck nations to reduce government spending and deficit, allow insolvent banks and financial institutions to fall, and aggressively raise the interest rate. But the reasoning was that their step will restore confidence in the nation, pay fiscal solve penalties in solvent companies, and protect currency value. Above all, it was stipulated that IMF funded capital had to be administered rationally in this region, which not favored parties receiving funds by preference. In the at least one of the affected countries, the restrictions on foreign ownership were greatly reduced. And the reasoning was that by stimulating the economy and saving the recession, government could restore confidence while preventing economic loss. They point out that the US government had pursued expansionary policies such as lowering interest rate, increased government spending, and cutting the tax. When the United States itself entered a recession in 2001, and arguably the same in the fiscal and monetary policies during the 2008-2009 global financial crisis. And IMF doing high interest rate. Why? The conventional high interest rate economic wisdom is normally employed by a monetary authority to attain the change objective of tightening monthly supply, discover currency speculation, stabilize exchange rates, curb currency depreciation, and ultimately contain the inflation. And criticism, main commentator in the retrospect criticized the IMF for encourage the developing economies of nation down the part of the fast track capitalist, meaning liberalization of the financial sector, which is elimination of restriction on capital flow, maintenance of high domestic interest rate to attract foreign investment and bank capital, and the pegging of the national currency to the dollar to reassure foreign investors against currency risk. Asian financial crisis nation. What have happened and what Malaysian do on the Asian financial crisis? From in July 1997, within the day of the Thai baht devaluation, the nation ringgit was heavily traded by speculators. The overnight rate jumped from under 8% to over 14%. This led to rating downgrade and a general sell-off on the stock and currency market. By end of 1997, rating had fallen many notches. From investment grade to junk, the KLCE had lost more than 15% from above 1,200 to under 600, and the ringgit had lost 15% of its value, falling from above 2.50 under the 4.57 on 2008 on 23 January 1998 to the dollar. And then the Prime Minister Mahathir Mohamad imposed strike capital control and introduced a 3.80 PEG against the US dollar. And nation move involved fixing a local currency to the US dollar, stopping the overseas trade in the ringgit currency and other ringgit assets, therefore making offshore using the ringgit invalid, restricting the amount of currency and investment that residents can take aboard and import from foreign portfolio fund in a minimum 1 year stay period, which since has been converted to the exit tax. The decision to make the ringgit held aboard invalid has been also driven up sources of ringgit held aboard that speculators borrow from the manipulate the ringgit, for example, by selling short. Thus, would it had to repurchase the limited ringgit at the highest prices, making it unattractive to them. In addition, it also fully expected the trading of CLOB, which is Central Limit Order Book counter independently, freezing approximately 4.46 billion worth of share and affecting 172,000 investors. Most of them is from Singapore. In 1998, the output of the real economy declined, plunging the country into the first recession for many. The construction sector contracted 23.5%, manufacture struck 9%, and the agriculture sector. Overall, the country gross domestic product dropped 6.2%, 4.7% in the During that year, the ringgit plunged below and the KLCE fell below 270 points. In September that year also, various defensive measures were announced to overcome the crisis. The principal measure taken were to move the ringgit from a free float to the fixed exchange rate regime. Bank Negara fixed the ringgit at T3.8 to the dollar. Capital control were imposed while aid offer from the IMF was refused. Various task force agencies were formed. The corporate debt restructuring committee dealt with the corporate loan. Dana Harter discounted and bulk had loan from bank to facilitate orderly asset realization. Dana model recapitalized bank growth then settled at a slower but more sustainable pace. The massive current account deficit became a fairly substantial surplus. Banks were better capitalized and NPLs were realized in an orderly way. Small banks were bought out by strong ones. A large number of PLC were unable to regulate their financial affairs and were delisted. Compared to the 1997 current account by 2005, Malaysia was estimated to have a 14.06 billion surplus. Asset value, however, have returned to their pre-crisis high. Foreign investor confidence was still low, particularly due to the lack of the transparency shown in the House. The CLOB counter had been that weak. In 2005, the last of the crisis measures were removed or taken off the fixed exchange system, but unlike the crisis day, did not appear to be a free flood, but is a managed flood like a Singapore dollar. What happened in Thailand? From prominent economy of South Asian Asia during 1985 to 1996 was growing at the highest rate of 9%. Real estate sector was booming. High interest rate attracted investment from US and West. Export growth was very high. Reason for failure, Thailand baht was pegged at 25 to USD. At the same time, US had increased interest rate to the crowd inflation. This made US investors to take their money from Thailand and invest in US. This triggered the outflow of ringgit. Result is devaluation of baht and it reaches in the lowest point of 26% per ringgit. This made foreign loan costlier by 3 times. It resulted in collapse of various companies and biggest financial corporations finance-wide. There was fear among foreign investors about their money, so they started pulling money from this market. This depends a crisis due of money people lost their job and political instability. In Indonesia, in 1997, Indonesia seems far from the crisis because of the low inflation, trade surplus, harga foreign reserve on 2008 23 billion, good banking system. Its currency rupiah was appreciating due to the various company borrow loans from foreign institutions. Thailand floated its currency due to the Indonesian authority also widened rupiah band from 8% to 12%. In August, rupiah comes under reserve speculative attack which devalue it to the greatest extent. Same condition occurred in Indonesia, foreign corporate loans become a cost layer. Due to this, Jakarta Stock Exchange touched history law and Indonesia was 13.5% of GDP. Because of crisis, one USD cost 2,600 rupiah, but during the crisis, it reached this historic low of the 11,000 rupiah for one USD. This condition improved when IMF provide bailout package. Asian financial crisis on South Korea, which is highest NAP, non-performing asset, great conglomerate owned by government, debt to equity, which is 30%, and no return and profit on this NAP. And then excessive debt led to the takeover and Daewoo Motors of the General Motor. This is the timeline of the Asian financial crisis from July 1997 to January 1998. From early July, which is 2 July, but collapsed and turned to flat rate and continue to 18 July. Peso and rupiah are devalued. IMF extend 1.1 billion loan to Philippines on 11 August. IMF extend 17 billion loan to Thailand on 20 August. IMF approved another 2.9 billion boil out to the Thailand. And then last July 2008, the last July of 1997, Asian stock market hits a multi-year low. And then on October 23 October, Hong Kong dollar and the stock are under heavy pressure on 28 October, Korean won plugs to the new low. On November, IMF approved 40 billion package to Indonesia, and the last one on December 1997. IMF approved 57 billion package to Korea. This is a GDP of because of the Asian financial crisis. We can see on 1997, 1998, the GDP of nation is down, and also on Europe crisis, 2010 is also dropped the GDP from the cumulative real GDP growth 4.58%. And this is a 5 economic crisis that nation has ever faced, from GDP trend 1971 to 2011. On 1975, the first crisis is about oil crisis increased from USD 15 per barrel. Second crisis, second oil stock increased from USD 15 to USD 14 USD per barrel.
Stop.
And
Stop right there. This class every year come out from my student. Who coming from who? Where is the source?
I forget to take the
Yeah, you must take the source. Because
Okay.
this comes up every year, this is a wrong graph.
Oh,
And this I remember. Every year, student will take from this graph, and it's wrong. Wrong, the second one. It is the 1985. There, 1985 is the economic recession of Malaysia because of collapse of commodity prices. Oil shock is 73 and 79.
73.
Surprisingly, this graph every year come out. So students take from this graph from one that's always available online. Unfortunately, what is available is wrong.
Okay.
Whoever the author, I don't know who, and when you Google, his graph is coming up because it looks very nice.
Hmm.
How? I have the same graph in my note, but just because I don't put on the Google, online, my chapter on the recession, the timeline, I did it from 73 until now. But this is wrong. 73 is the first oil shock. 79 second oil shock. And this author who made this graph wrote second oil shock in 85. That's wrong.
Yeah.
85 there is the collapse of commodity prices. The opposite. Oil shock, prices of oil went up 2 times, 73, 79. 85 is the opposite. Commodities that Malaysia was exporting, palm oil, rubber, tin, and perhaps oil also. At that time, not yet much of oil because very little. So we're talking about rubber, palm oil, and tin. All the prices collapse, boom, fell down, collapse. So this graph is wrong. Okay. And then financial crisis 97, incidents of September 11, yeah. World recession started, financial crisis, subprime asset. Again, the very right, this makes student confused. Every time I must make a correction. The 2008, yes, we call it global economic recession of 2008, not subprime crisis. 2008 was the global economic crisis of 2008. Before that, 2005, 2005, subprime crisis was there. So this author has no what do you call this? Misinformation. Yeah. World recession started with financial crisis in the United States, which was subprime crisis of 2006. So the label must be 2005 there, the dip, 2005, 2006 there. You see 2004 there, still up, and 2005 and 2006 was the subprime crisis. subprime crisis. So I wrote an article about that, and I already explained to you in the class. Subprime crisis began with the collapse of housing prices in the United States. Before that collapse, banks were greedy, tamak, greedy to give loans to anyone that go to banks. You want loan? Yeah, you can get the loan. Because housing prices were up. Banks wanted to make a lot of money, would give loans to anyone, even though that person not qualified to get a loan. So when the prices of housing fell in 2005, these were the people who couldn't pay back the loans, and the banks must get the properties foreclosed, get the properties, and it's not the job of the bank to keep housings in their portfolio. So that becomes a crisis. Whereas the mortgage from these banks have been bought by commercial banks. They package them the into securities. So we call it mortgage-backed securities. Securities based on mortgage, and they sold that securities on Wall Street. The stock market. And once the housing prices collapse, MBS, mortgage-backed securities value become nothing, and the the peak, the pinnacle of this crisis subprime was Lehman Brothers Bank, the commercial bank, bankrupt because of no more value in the securities that mortgage this Lehman Brothers was selling on the stock market. No more values. And another thing, the country not Finland, Iceland, the country, small country Iceland went bankrupt because of the pension fund of that country, like EPF here, invest heavily on the Wall Street on mortgage-backed securities, bought securities based on mortgage in the US. We call it mortgage-backed securities. So that securities has no more value and become a crisis. From housing crisis spread to banking crisis, spread to the crisis on Wall Street, the the, 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 the stock market crisis, and spread into the real economy, manufacturing and so on. So that one, 2008, the label should be world or global economic recession of 2008. And he must make, whoever he or she here, must make another labeling at 2005, subprime crisis. Subprime crisis first, then global economic crisis. And continue with 2010's government deficit, fiscal crisis in Europe that began in Greece, spread to Portugal, Spain, and so on. That was 2010. So I'm surprised this graph every year come up through student presentation. And every year student will say 2008 subprime. No, 2008 not subprime. 2005, yes, subprime. And 2008 happened because of 2005 subprime. See, 2008 happened because of subprime that happened earlier in 2005. So we must be correct in what we do. Perhaps this is a presentation by some people, maybe class presentation, I don't know, and has been posted, become popular on the internet. Students every year, refer to that one, and I see it every year. I have to, Okay, go ahead now.
That's all for me, Doctor. This is the last slide.
So, what was the action by the Malaysian government to overcome? And that should be part of, you know, all the groups must handle that. And anything on ringgit, just like group number one.
What, Doctor?
I ask all the groups must touch on the ringgit.
For this slide on the ringgit, I have not do, Doctor.
Okay, now, um, what was the problem that Malaysia faced at that time? This, global crisis. What happened to Malaysia? That's number one. Number two, how did Malaysia, what did the government do, or the monetary banks, central bank did, or to overcome this problem? That's the question. Okay, you are presenting the economic crisis of
Okay, Doctor.
the East Asia. Yeah, you must elaborate more on what Dr. Majid did and what the central bank did. That was on the 1997-98. And what happened in 2008 crisis?
What? Okay, I answer the question, Doctor. What happened during the Malaysian financial crisis on 1997, which is between July 1997 and mid-January 1998. Firstly, the approximately USD 225 billion of share value were wiped off. Before long, the impact of the financial crisis was being felt in the real sector, as the evidenced by business closure, retrenchment leading to the high employment and the increase the inflation of level. What did the government respond, and what did government doing on the financial crisis? Nation handled the crisis by use of fiscal and monetary policy, by maybe increase the government spending, corporate debt restructuring, and the establishment of special vehicle of purchase and recapitalize on performing loan from banking institution.
Yeah, you must remember the dana harta and dana
Yeah.
modal.
Mm.
Those are the two government economic vehicle to overcome the 1997-98 economic crisis. Dana harta, you know, restructure debts of companies, uh, you know, companies are they selling off, they cannot pay, so they sell off. So the government took some of those assets and restructured the assets. So that's how the name Dana Harta, you know. Or if the company, you have to check the details, okay? If the company can still maintain, so the government would pump in some kind of soft loan, very soft loan, meaning that very low interest rate to the companies to keep the assets. But the whole thing is about restructuring. When we talk about restructuring, if a company has many assets on different items, different assets, which is not in accordance to the company's core business, or what do you call this, core business, or core competencies. For example, if I have a company, I have a bus company, I have a tofu making company, I have a koropok making koropok company. I also have a tuition company. I have also a real estate company. I have so many different companies. Where's my expertise in something like manufacturing of shoes? Maybe, suppose I've been all this in textile. Okay, my company is in textile, anything textile. But I also have companies making burger, totally different thing. So the government would advise me, okay, you sell off your burger company because that's not your expertise. You focus on your core expertise only. That's one example of restructuring. The companies must be restructured to really focus on the core competencies, what the company has, the are competent. That I'm just giving example. So here come the dana harta, you know. So we have to read the details how they did it. And when we talk about the dana harta, like housing, properties, companies must, to stay profitable, must sell properties, including land, everything. So dana harta will do something. Probably will take up equities in that land or building or property, real estate. So that's dana harta job of dana harta. There's another dana modal to pump in companies that the government consider very important, and the companies like, for example, that should be assisted. So the government will give soft loan money to the companies in order to stay in the business. So that's dana modal. So we have dana harta. Dana harta will buy housing, properties, if they decide that's the best way, and try to sell it. So that's restructure. Both things are for restructuring. At the same time, the government uh, restrict, put more tightening on the banking sector, more tightening, to tighten, kemaskan. How? One of the thing is that to give a new definition of non-performing loan. In the past, because of that. Before that, if you don't pay your loan, if you cannot pay your loan 6 months in a row, you are considered that loan is non-performing. They change it from 6 months to 3 months to put more discipline on the banking sector. If someone cannot pay their loans after 3 months, no payment, considered already bad loans. Yes, that's what we call it, bad loans. That's how to tighten the. This is different from the COVID-19 2 years ago. Moratorium, that's different thing. Moratorium is to delay the payment, and this special thing because of COVID-19 lockdown is different case totally. So that's why the opposite during those 1970, 1997, 98 East Asian financial crisis, it was because of the loan, bad loans, many bad loans. Loans that shouldn't have happened. That's why they tighten it, make it tight. 3 months no pay, bad loans. Opposite, right? But during COVID-19, almost a year until December. Well, not a year, 8 months, but until December, it was put a moratorium. People who have loans do not have to pay loans yet. But that's totally up to the banks. Again, banking sector, the government can only suggest. It's up to the banks to, you know, to get that moratorium. Okay, question from the class. For this group, and we're gonna take a break 5 minutes. Okay, but first question from the class to this group. Who wants to ask? Aida or Hanif? One question only, because time is so limited. Come on, quickly. Please. One question from the class to the group, to the presenter.
I have a
Yes.
question
Okay.
to Sabrina.
Mhm.
Sabrina, can I know what causes the financial crisis in Malaysia in 1997?
Well,
Okay, what?
it's clear already. It is the currency crisis. Spread of, you know, the meltdown of currency that began in Thailand. So the thing is, hot money. The thing is that investment ran out of Malaysia, ran out of Thailand, ran out, you know, get out of Thailand, Malaysia, Indonesia, all this, because this, when they came out, the currency collapsed. I think Nur Iza, you should ask another question. Okay, Sabrina, answer that one. That was my answer. What is your answer?
Okay, doctor, my answer. So, what the question is what the causes of financial crisis, right? Okay. Uh, what you know that the Asian financial crisis is began on 1997, 1998, from begin in Thailand and spread to Asian country, include nation. It began from currency crisis on Bangkok, and what is the causes is a wholesale adoption of the financial deregulation in the both capital accounts and banking sector. And okay, that's all.
Yeah. It was unregulated financial markets that happened during the advent of globalization at that time when the technology was, you know, becoming more advanced. The technology, you can just sell or purchase by just the push of the button. Financial uh, technology with the internet at that time, uh, it's just new. Internet was just new, okay, during that time, and there was the technology helped this uh, contagion, the spread, because according to Dr. Mahathir, there was a planned attack by this financial uh, George Soros. He mentioned the name George Soros, just trying to make money out of financial uh, sector in all these countries to create collapses of currencies, uh, and they come in with lots of money and they came out quickly that money with that money, uh, making gains after some quick gains. They came out from those countries, and as a result, currency collapsed, the value collapsed. uh, One more question, because on the 2010 there was no question. I asked indirectly, so perhaps somebody want to ask, what did the government do to handle the crisis, the global economic recession of 2008? What did the government do? I'm already asking, so please answer.
Okay, doctor. What Malaysian government respond on crisis on 2008?
Yeah.
Okay, first, uh, from the Great Recession, which is congrats the Malaysian Recovery and Reinvestment Act of 2009, which include acting at 800 billion to promote economic recovery. The Recovery Act assigned GAO a range of responsibilities to help promote the accountability and transparency in the use of the DAS fund. And what solved the financial crisis?
Yeah. Okay. Yeah. During that time, 2008, Malaysia strengthened its financial sector, do the more reforms in the financial sector, more transparency, and also on the trade policy, the government try to diversify the direction of trade because of recession in the major markets like United States, Europe recession. So Malaysia looked into China to export, looked into India to export palm oil, looked into China to export palm oil, looked into in China to export electronic components because China at that time was doing well. Global economic crisis could be bigger if not because of high rate of growth in China. During the 2008 global economic crisis, China was doing quite well. China was doing like 6%, even though China in the past before that 10%. China 12, 9, 10%. China was doing that rate before that 2008. But with the 2008 global economic recession, China's growth was down to 6, but 6 is still high, 6%. So suppose China was doing 2%, global economic crisis could be deeper because we think of the global, the total world. So Malaysia was doing diversification in terms of the direction of trade. Okay, that's my answer. That's how Malaysia managed it. As a result, China now has become number one trading partner of Malaysia. That happened together with the 2008 global economic recession. Recession in the West, but not in China. Only slowed down in China. But today there's already sign of slowing down in China. Today. I'm talking about today, now. Okay, thank you for the presentation. So we take a break for 5 minutes. We have 1 more hour. We try to get 2 groups inside this 1 hour. So 5 minutes break. I think you need that break too. All right, see you 1:05. Now
Okay,
1
Doctor.
o'clock. Okay. It's raining outside. I can show you. Start to rain. And thunder. Subhanallah. Can you see the rain just now?
Yes, Doctor.
All right, 1:05.
Okay, see you at 1:05, Doctor.
Get ready your slide. So I share something over here while waiting. This FOMC, which is today. This is from this website, uh, tracking, live what's going to happen. So FOMC meeting September 2022 live updates. U.S. market end in a red on Tuesday, which is, yeah. As Fed begins today meeting, Dow Jones 30, Nasdaq, Compo, S&P 500 down 1%. So FOMC meeting, the 2 day starting today. Yeah. So we can watch that live 2:30 p.m. 2:30 p.m. is actually 2:30 a.m. tonight or tomorrow morning in Malaysia. So you must know that Malaysia is 12 hours ahead. Is if it's now it's 1 o'clock here, 1 o'clock afternoon here. It is 1 a.m. nighttime, sleeping time in the U.S. now. So now 1:05. I'm gonna stop sharing. Please the group put up your slide. We continue with our seminar. Okay, wait 1 minute. One second. Okay, you can start.
Assalamualaikum warahmatullahi wabarakatuh. Can hear me?
Yes.
Okay. Good afternoon to Dr. Shukri and my fellow friends. Today, my group will share about global recession in 2008 and European fiscal economic crisis in 2010 until 2018. Okay, next. Okay. Okay, the first economic crisis is global recession in 2008, which is known as the Great Recession. Next, the financial crisis or the Great Recession is the biggest economic event in the world after the Great Depression of the 1930s. The recession was caused ultimately by global imbalance in trade and capital flows, globalization of financial markets, the trend towards a new finance-led capitalism, and the related pattern of income distribution. Next, before we go further, let's watch the video.
From December 2007 to June 2009, the United States suffered an extended economic downturn that came to be known as the Great Recession. It was the worst financial crisis in the U.S. since the Great Depression, leaving an impact on homes and businesses in America and around the world. We'll look at the causes of the recession itself, and its lasting impact. While failures in financial regulation and excessive borrowing by households and Wall Street contributed, the primary cause of the Great Recession was the subprime mortgage crisis. A mortgage is a loan that allows people to buy a house up front. A subprime mortgage is normally issued to borrowers with low credit ratings. And historically, many banks wouldn't even make loans to people with bad credit. In the early 2000s, however, the housing market was booming, so banks began giving subprime mortgages to people even if they had low credit ratings. In other words, lenders, often banks, were loaning money to people who were less likely to be able to pay them back and charging them more money for those mortgage loans through high interest rates. Now, on the face of it, it doesn't sound like the best deal for the lender or the borrower. But many people took on these subprime mortgages because they stood to make a large profit if their house increased in value. And that seemed like a pretty good bet. Houses had been increasing in value over the past several years. Homeownership had always been central to the American dream, and people who may never have imagined they could own a home saw the possibility in front of them. So, where did things go wrong? In 2007, the housing bubble burst. As demand went down, the prices of homes dropped rapidly. People stopped investing in real estate since it was no longer as profitable. Many people were no longer able to pay off their mortgages or sell their houses, and the banks foreclosed their homes. Since the foreclosed houses were now worth less money, financial institutions lost money too, along with the homeowners. As a result, the housing market failed, banks collapsed, the economy plummeted, and the Great Recession had officially begun. So, what did this mean for the average American? The economic downturn was devastating. Many people and businesses suffered huge financial losses and therefore spent less money, further damaging the economy. Financial firms were not as capable of lending money, and in 2008, the US government finally had to step in and bail out the banks, increasing the national deficit. During the Great Recession, more than 8 million Americans lost their jobs. Nearly 4 million homes were foreclosed each year, and 2.5 million businesses closed. Bank bailouts, federal aid to the auto industry, and government spending programs helped avoid an even bigger crisis. But it may take decades more to fully understand the significance of the Great Recession.
Yes, I'm making it myself clearly.
Welcome to Crash Course Economics. My name is Jacob Clifford.
And I'm Adrian Hill. And
Okay. The global economic crisis, the Great Recession of 2008, 2008 is Great Recession, but subprime is 2005 and 6 and 7, 5, 6, 7. Those are the subprime. I mean, 2005, the housing collapsed, housing prices collapsed, and 2005, 6, 5 and 6, or you can say also 7, the subprime. And that developed into 2008 global economic crisis. That's why I'm saying global. Compared with subprime, subprime is only in the US. Subprime happened only in the US. That was 2005, 6, and 7. With ultimately 2008 became a global crisis. What happened in the US only, which is subprime, spread contagiously, to global economy, and that was 2008. That's why I made a lot of comments on the graph previously, the same graph coming up every year from students presentation, because that graph became popular somehow, and that graph labeling was wrong. You should label differently. 2008 was separate, the global economic recession or Great Recession of 2008. You put another label on the left of that, which is 2005, 6, and 7 was the subprime crisis in the United States only. Okay, go ahead. Continue.
Okay, next slide. Okay, the immediate cause of the crisis was the burst of the housing bubble in the United States. In economic terms, a bubble is when the price of an asset increases above its true intrinsic or fundamental value. In other words, a bubble is when the price of the asset does not correspond to its fundamental value. From the 1990s until February 2007, prices of houses in the United States increased by a staggering 130%. This was a housing bubble. The bubble eventually had to burst, which is price came crashing down. The housing bubble led to a decline in mortgage standards. Financial institutions, which is banks, began to lend to subprime borrowers with low creditworthiness. There was an assumption that price will always rise, and if the subprime borrowers are unable to repay their loans, banks can sell the houses and recover the loan. Houses prices rose further and US households becomes leveraged, which is they borrow more relative to their income. Next. By September 2007, prices declined by 25%. The reason for the decline were, firstly, the housing market became saturated. Everyone who needed a house had one, so there was a decrease in the demand for houses. Second, Fed raises interest rates from June 2004 to June 2006. Home loans became expensive. As prices of houses fell, people began to default on their home mortgage loans. As their homes were worth less now, due to reduction in price, they no longer had the incentive to repay their loans, which became very expensive due to the increase in interest rates. Widespread defaults resulted in foreclosure. Banks had to sell off the houses keep as collateral mortgage to recover the loans. But as house prices were low, banks had to suffer losses on the mortgage home loans as they could not recover the loans fully. The rise in foreclosure pushed down prices further as the supply of houses in the market increased. This was essentially a subprime mortgage crisis. Next. The borrowers could not refinance the loans as the interest rates were increased by the Federal Reserve in 2007. The standard mortgage in the US has a maturity of 30 years and has a fixed interest rate. But in adjustable rate mortgage, which grew in popularity, the initial interest rates are too low, which is 1%, and after 2 or 3 years, it gets aligned to the market interest rates. They are also known as teaser loans. Therefore, after 3 to until 2 years, the borrowers used to refinance into a standard mortgage. Refinance means taking a new loan, standard mortgage, to discharge an existing loan. But borrowers could not refinance as the market interest rates increased due to an increase in interest rates, and hence they default on the loan. This bubble could have been restricted to the housing market in the United States, but it spread to the financial markets and to the whole of the world and became a global financial crisis.
Yes. From housing market, the bubble burst, pecah bubble. What is bubble? A buoy, buoy. Bubble is like a balloon, buoy. Buoy pecah, housing drop, housing prices drop. So housing crisis to banking crisis to crisis on the Wall Street and global financial crisis and global economic crisis. For example, Toyota. I mentioned this earlier in my class. Toyota in 2009. So remember, 2008 was the year, the crisis. The following year, 2009, Toyota, the first time ever in the history of Toyota, never lost. 2009, first time Toyota recorded a red, meaning loss. Because why? Cannot sell the car to the US. The US have, having recession. Europe also having recession. So more, expenditure higher than revenue. So Toyota, the first time ever experienced loss that year, 2009. And also 2009 election in Japan, the LDP, Liberal Democratic Party, that has been in power ever since Japan, since 1945. 2009, LDP lost. Shinzo Abe lost. uh, and then for a short time, Japan was under the left wing, uh, Japan Justice Party of Japan. Then quickly, LDP won again, and Shinzo Abe became prime minister second time. And 2 months ago, Shinzo Abe was assassinated, the prime minister, by a young man. The news about 2 months ago. Japan's former prime minister was gunned down for
Yeah, I heard that.
someone crazy. I think he's crazy. I'm not saying he's gila, but uh, somehow okay. So Toyota, company lost, meaning that this has spread from housing to banks to Wall Street to financial crisis globally and the real economy, manufacturing, trade and so on. Toyota cannot sell products because recession in US. Um, I wish I could go to the US at that time and watch for myself what happened in 2008, how severe it was. So we just watching from here. Reading from here is not the same. Okay, go ahead, please.
Okay, next slide. Okay, next, the impact of the recession to Malaysian economy. Malaysia was relatively unaffected by the financial turmoil in the first half of 2008. The financial and economic domains worse in the second half 2008 and in the first quarter of 2009. Real gross domestic product GDP grew only 0.1% year on year in the fourth quarter of 2008 compared to 4.7% year-on-year growth in the third quarter of the same year. The average GDP growth was 5.9% year-on-year in the first 9 months of 2008. Real GDP fell by 6.2% in the first quarter of 2009. The first time growth was in negative territory since 2001.
Yeah.
Okay.
So meaning that this impact on Malaysia began to be felt in first quarter the following year, right? 2009. Not immediately, but the following year, first quarter, negative 6.2. Okay, continue.
Okay, the third one. The decline performance in the first quarter of 2009 confirmed the expectation that Malaysia faces a full-blown recession for the year 2009. The decline was mainly due to drastic contraction in export value of 27.9% year-on-year in January 2009.
Okay, stop. That shows
The
what? That shows proof that Malaysia is a what? What? Malaysia is
small open economy.
open economy dependent on exports. When Europe, when United States and Europe demam, Malaysia will demam lebih teruk. You understand? Because Malaysia depend on the markets there to export. All right, go ahead.
Okay. The sharp decline in exports adversely affected economic growth, particularly in the manufacturing sector, which contracted 19.1% in the first quarter of 2009.
Very, very big. 19% contraction is big. Okay, go ahead.
Okay, next. Like other Asian countries, Malaysia suffered capital flights since the second quarter of 2008. Banks and financial institutions in the US and the West reduced their international business and focused their home markets. There was a big drop in funds flowing into Malaysia, with net financial and capital flows
Yes.
falling from negative 37.7 billion in 2007 to ringgit Malaysia negative 118.5 billion in 2008.
Okay, we can say that this global economic recession of 2008, the impact following year in Malaysia 2009 was that trade negatively affected, trade Malaysia's export negatively affected, and also investments, FDI and so on, investment that would have come to Malaysia, would have come but did not come because of their countries. They concentrate on their countries. They have no money. Recession, right? All right.
Okay, next, Malaysia was one of the countries affected by portfolio investment outflows in 2008. The reversal of the portfolio capital flows due to repatriation by foreign participants affected the stock market significantly, with the Kuala Lumpur Composite Index KLCI falling from 1393 points in January 2008 to 876 points in December 2009. There is a strong correlation between changes in net portfolio equity flows and stock prices in Malaysia. Next, foreign direct investment into Malaysia plunged 98% from negative 15.9 billion in the second quarter of 2008 to ringgit Malaysia negative 0.3 billion in the third quarter. For the full year, foreign direct investment decreased by 17% compared to year 2007. Direct investment by Malaysian companies increased to ringgit Malaysia 50.2 billion in 2008. Okay. Next, the most worrying drop had been in manufacturers' exports, particularly electronics, electrical machinery, and appliance together account for 40% of Malaysia's export. In the fourth quarter of 2008, total manufacturers' exports declined to 20% quarter to quarter, led by semiconductors and electronics. Agriculture and natural resources exports also dropped as commodity prices tumbled. In the same period, palm oil exports dropped 32% and crude oil 33% quarter to quarter.
Okay, meaning that
Okay,
I said in the following year, no, fourth quarter same year already started to be felt, right? In the export sector, more immediate. Fourth quarter started to see drop the export. Okay, fourth quarter 2008. All right, go ahead.
The data released by the Malaysian Department of Statistics show that Industrial Production Index (IPI) of Malaysia for January 2009 fell 19.8% on a year-on-year basis and 4.0% on a month-on-month basis. The contraction in January was due to a drop in three indices, namely manufacturing, which is to 26.3%, mining 5.8%, and electricity 12.5%. Contraction in manufacturing output was due to decrease in subsectors such as electrical products, petroleum, chemical, rubber and plastic products. Next slide. Okay, Malaysia's strategies to confronting the recession. Okay. Like other countries, to counter the recession, the Malaysian government introduced the stimulus package to revive the economy. The first one is fiscal stimulus programs amounting to 67 billion. And the second strategy is monetary stimulus to reduce mediation costs. And the last one, comprehensive measures to ensure continued access to financing, as well as minimize the impact of the economic downturn on certain sectors affected.
Yeah.
Okay, next slide.
So Malaysia took in terms of fiscal policy, more pump prime, more expenditure, government expenditure, expand, more expenditure to run the economy, to make the economy running, the engine running. So in terms of fiscal, expansionary fiscal policy, in terms of monetary, expansionary also, which is to reduce interest rate, to make, the cost is cheaper to borrow. So interest rate was lowered to, reduce the interest rate. We call it expansionary monetary policy. Expansion, reduce interest rate, more money available. Do you understand? Expansionary monetary policy, reduce the interest rate, and comprehensive measure all other measures, perhaps more subsidies at that time for the poor. All right, continue.
Okay,
These are the stimulus
the
package.
government.
What is stimulus package? To stimulate the economy. Governments pump in money. All right, go ahead.
The government had originally allocated about 206 billion for both of the operating and the development expenditure for 2009. However, when the indicators were showing that Malaysia was also moving into negative growth territory, the government introduced the first stimulus package worth 7 billion ringgit on 4 November 2008 to avoid a possible recession in 2009. The distribution of the money is as follows, which is first to build, upgrade, improve and maintain facilities, build low and medium cost houses, human capital development program, faster improvement of telecommunication service and assistance to private sector.
Yeah,
And
infrastructure, expenditure, development, infrastructure, and also assistance to private sector to firms. Okay, go ahead.
Under the first package, workers can opt to reduce their contribution to their employees' provident fund to 8% from 11% in 2008 and 2009, and those with existing housing loans can choose to extend their repayment period of 25 until 30 years now. This package has been criticized as being rather late as business condition and consumer sentiments in Malaysia had turned to new lows while the amount is too small. Thus, when the economy was, the government decided on a second package, which was announced on March 2009. The second package is worth 60 billion ringgit Malaysia, which is almost 9% of GDP, or about 16 billion US dollar, and is being allocated over 2009 until 2010 according to 4 trusts, which is first reduce unemployment and increase employment opportunities, easing the burden of the public, especially vulnerable groups, helping the private sector to cope with the crisis and build capacity for the future. Okay, next slide. Okay, for the monetary stimulus, lowering the overnight policy rate (OPR) by 150 basis points to 2.0% between November 2008 and February 2009. The second one, lowering the statutory reserve requirement by 300 basis points to 1%. Okay, next slide. Okay, the comprehensive measure. Firstly, the ensuring access to ongoing financing, financing and guarantee schemes for SMEs and business, establishment of financial guarantee institution. Okay, there's a second one, reorganization and rescheduling of credit facilities. Flexibility to restructure and reschedule loans so that be able to settle it yearly with the borrower. Role of the Corporate Debt Restructuring Committee (CDRC), enhanced and more small debt settlements seem widespread. The third one, preliminary measures to maintain confidence in the financial sector, which is full guarantee of all deposits until the end of 2010. BNM's liquidity facility extended to insurance operators and takaful. Next slide. Okay, this one, channels for borrowers to get help and solution. Integrated Contact Center (BNM), which is BNM Link, BNM Telelink, Unique Complaint Management and Advisory Service. Expanding the scope of the counselling and management agencies inclusion credit. ABM Connect toll-free channel, complaints unit in financial institution, financial mediation bureau, and small debt restructuring committee. Next. Other than the measure that I have mentioned, voluntary reduction in employee contribution to EPF by 3 percentage points from 11% to 8% in 2009 and 2010. Allow the purchase of commercial properties costing more than 500,000 by foreigners for their own use without the need for permission from FIC. And then increasing the level of vehicle loan eligibility for civil servants. Okay, next slide. Okay, the implementation of this measure not only provided direct support to domestic activities, but also equally important was that this action prompted a slower decline of 2.2% in the second quarter of 2009, before recovering to register positive growth of 1.7% in the second half of the year. What's important is that private consumption strengthened to 1.7% in the fourth quarter. In terms of the external sector, stabilization, which was followed by a gradual recovery in the global economy since mid-2009, it has continued to support the Malaysian economy. In particular, economic recovery strong regional, especially China's RR, benefits Malaysia, with export to the Asian region improved in the second half of the year. Malaysia's export to RR China in particular recovered to record positive annual growth as early as August. The recovery in exports become more comprehensive by the end of the year following the recovery exports to some developed economies. As a result, external demand contributes positively to growth in the fourth quarter of 2009. Next slide. Okay, as a conclusion, as an open economy, Malaysia was also affected by the global economic downturn which began in the third quarter of 2008 and continue into the first quarter of 2009. With the stabilization of global financial markets followed by the recovery in developed economies, the rapid policy response through fiscal and monetary policy has played an important role in maintaining domestic demand throughout the period. Malaysia's strong economic fundamentals, robust financial system, and proactive implementation of comprehensive policy support measures have managed to prevent the country economy from slipping into a worse and longer-lasting negative growth scene. Strong economic and financial fundamentals have provided the basis for a quick recovery. The strength and stability of the domestic financial system during this period ensures uninterrupted financial mediation, and the private sector can continue to have access to credit. Together with a strong private financial position, this situation will prompt a rapid recovery in domestic demand as soon as the global financial crisis is under control and the global economy returns to stability. Moving forward, these fundamentals will further brighten the prospect for a stronger recovery.
Thank you.
For the next part,
Yeah. All right.
I pass to Haida.
You must do this quickly because one more group. We have one more group, right? Right or not?
Yeah, yeah,
Yes,
Doctor.
Yeah, yeah.
yes, doctor.
Yeah. We must do this part very quickly.
So the next is European fiscal economic crisis 2010 and until 2018. So a multi-year debt crisis that took place in European Union from 2009 until the mid to late 2010s. The European sovereign debt crisis was a period when several European countries experienced the collapse of financial institutions, high government debt, and rapidly rising bond yields spread in government securities. So the history of the crisis is the debt crisis began in 2008 with the collapse of Iceland banking system, then spread primarily to Portugal, Italy, Ireland, Greece, and Spain in 2009. The crisis was eventually controlled by the financial guarantees of European countries who feared the collapse of the euro and financial contagion and by the International Monetary Fund IMF. The causes of the crisis is the eurozone crisis resulted from the structural problem of the eurozone and a combination of complex factors. The the globalization of finance, which is easy credit condition during the 2002 until 2008 period that encouraged high risk lending and borrowing practice. The next is the financial crisis of 2007 until 2008, which is international trade imbalance, and the Great Recession of 2008 until 2012, which is fiscal policy. What is the crisis response is external assistance provided as part of eurozone membership, but only after heightened market stress accompanied by austerity and reforms, and EMU membership did not allow countries to employ monetary and exchange rate policy. What is the effect of Malaysia economy? Um, The, the European sovereign debt crisis posed a key risk to the global economy, and its potential escalation may have significant spillover effect on the real economy and financial market. The transmission of the impact of the euro debt crisis to the Malaysian economy is through two major channels, namely the trade and financial flow. On the real sector side, Malaysia is exposed to the euro debt crisis mainly through the trade channel, with potential subsequent spillover effect on private investment and consumption spending. On the financial side, the impact from the European sovereign debt crisis will be transmitted mainly via increased uncertainty and volatility in the global financial market, and the attendant rise in the leveraging activity, particularly among European financial institutions. While Malaysia faced downside risk to growth from such external shock, the resilience of the economy has improved steadily over the years. So this is how Malaysia overcome this economic crisis. Number one is MITI, MIT. MITI will explore new opportunity in the market to support domestic based on industries, including small and medium enterprise. Second is Malaysia has already finalized 11 the agreement, which is six regional agreement with countries such as the People Republic of China and Republic of Korea through the Organization of National Southeast Asian, and well as 5 bilateral agreements with Japan, Pakistan, New Zealand, India, and Chile. The next is Malaysia start negotiation on the Trans-Pacific Partnership Agreement (TPP), Malaysia European Union Free Trade Agreement (MUFTA), and the Malaysian Turkey Free Trade Agreement MTFTA. The next is MIDA provide the necessary support for the sector economic driven by the private sector. The last one is monetary policy remains accommodative, which is the maintain of base rate overnight OPR at the low level for continued period can cause financial imbalance. So the OPR has been increased gradually each by time 25 basis point. Financial condition supportive of economic activity. So conclusion, the European sovereign debt crisis posed a key downside risk to domestic growth prospect. Thus far, the impact on the domestic economy has been manageable. Macroeconomic fundamental a resilient economic structure, a stronger and more developed financial system, and the authorities' ability to implement policy effectively and efficiently are expected to put Malaysia in good position to manage potential external shock to the economy. The closer cooperation among regional authorities will contribute to effort to improve regional surveillance and monitoring system against potential shock, in particular from volatile capital flows into the region. Malaysia has been active in promoting policy surveillance and coordination with other regional economies to further strengthen the country's and region's defense mechanism against external shock.
Yes. And we have no time for questions. I want to add to that conclusion. You read here, Malaysia, as a result of this, put in more discipline on the financial sector, restructure the financial sector and so on, but making it accommodative because of the recession. And I want to add, this is very important, in terms of trade policy, Malaysia tried to expand trade with China and ASEAN countries other than Singapore. Because when you talk about ASEAN, Singapore has been there always, no matter what. Singapore is always the biggest trade partner. What about Thailand? What about Philippines? Indonesia, all this. So Malaysia wanted to, because of this, diversify its export market to China and ASEAN countries. So we have to stop at that. Thank you very much. And please, the last group, not doesn't mean that not important, equally important, please. I'm sorry that no time for questioning. So start now. Your
Okay,
slide.
Doctor.
Thank you for the group just now. Okay, the last group of the day, we have about 12 minutes.
Can you see my screen?
Yes,
Okay.
I can see.
Yeah, can see.
Doctor, may I start?
Yes, sure.
Okay, Assalamualaikum and good afternoon to our lecturer and friends. I am Nurul Eza binti Ismail and my group partner is Fatina Soha binti Ismail. We will present the topic about COVID-19 crisis in Malaysia. So before we go straight forward into our group topic, I would like to touch another crisis quickly. Next. Before we have COVID-19 recession, we already have an economic crisis, the Great Inflation. It started with the mess of the stock market. It has lost nearly 50%. The economic growth is weak, and there's the easy money policies of the American Central Bank were meant to generate full employment. Unfortunately, they also resulted in high inflation. Next. Next, we also have Asian financial crisis. The Asian financial crisis is deemed as one of the worst economic crises in Malaysia also. The economy declined during that time and the ringgit fell to its lowest against the greenback in January 1998. To revive the economy, the government announced a 2 billion fiscal stimulus package. We worked out to about 1.5% of GDP at that time. Next.
Triggered by Japanese commercial bank? No, I don't think so. Japanese thing is not part of this. Okay.
All right, Doctor. Next. Besides, we also have a global recession crisis 2008, or also known as the Great Recession. The global financial crisis of 2008 that started in the US, as the previous group explained just now. For Malaysia, the country suffered the impact in terms of financial and trade channels. Next. Now we move to the Great Lockdown 2020. It happened because the virus COVID-19 outbreak. We all noticed that the COVID-19 pandemic in Malaysia had a big impact on the Malaysia economy, which is it leading to the devaluation of the Malaysia ringgit and the decline in the GDP. The pandemic also affected several key sectors as entertainment, market, retail, hospitality, and tourism. Besides shortage in goods and service, many businesses had to cope with the social distancing and lockdown restriction, which affected their operation and revenue. Next. Next slide. Okay. Sorry, Fatin. Previous slide, please. Okay. Speaking generally, from the economic aspect, we experienced stock in Malaysia, stock exchange of Bursa Malaysia tumble during the outbreak as investors sold their securities due to the expected economic impact caused by the virus, which along with other emerging stock market are predicted to remain until June. With China as Malaysia's largest trading partner, the country's economy was directly impacted, and economic experts have warned the prolonged virus outbreak could hit the country's GDP hard. In late February, there's an announcement that saying investment of Malaysia also predicted that the Malaysia ringgit would weaken further due to the local and worldwide outbreak, with ramifications for the 2020 Malaysia political crisis at that time. Next. Okay, now I want to make a simple comparison between our crisis now with the past one, which is the Great Recession 2008. From the aspect of the similarities, the groups that were struggling the most before the recession began is the people of lower income have been hit the hardest. Now, in the COVID-19 recession, more than 50% of low-income households have personally experienced job loss already. Second, the longer the recession lasts, the more social upheaval takes place. Third, fear and withdrawal fueled the recession. In 2008, it was a financial crisis. In 2020, it is a fear of the virus and getting affected that leading people to withdraw from the normal economic activity. Even though there are the similarities over there, it does not mean that COVID-19 and 2008 crisis is the same thing. Both of them is truly different because COVID recession is more intense because it's more bigger than 2008 recession. Second, COVID-19 recession was caused by a virus, but the Great Recession 2008 was an economic bubble. 2008 recession is a financial crisis. Third, COVID recession impacted women more than men. Next. Alright, economy have talked a lot about what kind of recession come back rapidly versus recession that come back slowly. And what we want is a rapid rebound that we call the V-shaped recovery. It will go down steeply, but it will come back just as rapidly. That V-shaped recovery is definitely better than a long U-shaped recovery or a bowl. where we go down and then we struggle and scrap our way to come back. Then if we think about the COVID-19 recession, we hope and maybe even expect that it could be a V-shape, that it could come back faster than a normal recession, because it all we begin from something that was totally outside the economy and out of our control. So if we could get that thing off our back, we can come back to where we were before the recession began well. Next. So before that, I want to share three reasons why COVID-19 has been worse in Malaysia during 2021. First, the lockdown in Malaysia have been relatively longer and stricter than elsewhere, and this has caused structural damage to business, employment, income, and saving, which affected recovery prospects. Second, the government stimulus package has not been as large or as effective as they had been presented. Around half of the total allocation was not used quickly or at all, and around half of what was used come from the private sector, such as EPF withdrawals. Third, Malaysia has been caught by COVID-19 in the middle of a structural transformation of the economy, substituting its engine of growth from investment to consumption and from the industrial to the service sector. Next, we move to Malaysia economy in 2021 during economic crisis. First, we are at a turning point, moving from a technical recession into slow and fragile growth. From that, we expect to see a recovery pace actually, but slower than expectation, and certainly not the 6 until 7% forecast by others. Growth will more likely be around half of this in 2.5 until 3.5 percentage range. Second, Malaysia do not have a balanced growth model in Malaysia at that time, with recovery likely to be pushed by consumption, not investment. The impact of the COVID-19 crisis has caused significant structural damage, which needs investment to put right.
Okay.
Third, Malaysia is likely to emerge from the crisis as the worst performer among the larger Asian countries, and if, as has been predicted already, the move to the endemic phase is postponed by the Omicron variant at that time, the transition to slow and fragile recovery may be derailed, especially if the same full-time policy of lockdown re-emerged at that time during 2021. Next. Alright, we move to another issue, which our current issue that has gone viral on social media about, is it true that Malaysia is facing an economic crisis just because of the sliding in ringgit Malaysia? First of all, we have to see our currency as generally. We cannot compare our ringgit to dollar as only because actually our ringgit also has increased compared to another currency in the world. Yeah, it is true that our ringgit value have dropped 7.5% compared to dollar, as seen early 2022, but other currency from developed country also has decreased compared to dollar AS. As example, you can see from here, yen Japan also dropped 19.2%. Pound sterling UK dropped 40.4%. Euro dropped 11.7%. Yuan China also dropped 8.3%. Peso Filipina dropped 10.3%. Baht Thailand dropped 8.7%. Won Korea dropped 13.7%. And dollar New Zealand also dropped 10.5% compared to the dollar US. So if our dropping in ringgit value is said as an economic crisis, how about that other country that also having a dropping in their currency worse than Malaysia? Next slide. To compare with our trading partner and other main currency in the world, actually the value of our ringgit has increased. We can see from the figure, ringgit value has increased 14.2% compared to yen. Ringgit Malaysia increased 8.2%. From the pound sterling, ringgit Malaysia also increased 4.5% compared to euro, increased 3.9% compared to dollar, increased 7.2% compared to won Korea, increased 1.1% compared to yuan China, increased 3.2% compared to peso Filipina, increased 3.6% compared to dollar Taiwan, and also increased 1.4% compared to baht Thai. So the important one also, as the export country, low ringgit value give our country a positive impact to the country export earning. Next. So this is the cases that going viral on the social media. Many people assume and make their statement that our country is having an economic crisis, which is I already discussed just now. Next. So what I want to say here, we cannot just see to one factor or aspect only to determine our economy. Besides that, I also want to share with you all about our economic fundamentals. This is the important thing to determine our currency also. We have to make sure our economic fundamental is strong. I can say that our economic fundamental is strong. To prove it, we can see that our GDP's growth for 3 quarters constantly. Fourth quarter 2021, GDP grew 3.6%. First quarter 2022, GDP also grew 5.0%, and second quarter 2022, GDP grew 8.9%. So this is the proof that our economic fundamental is strong. Second thing is the unemployment rate dropped to the lowest level since COVID hit the country from 5.3% to 3.7%. Third, industrial production index increased by 12.5% on July 2020 compared to the previous year. Fourth, wholesale and retail trade also increased by 41% on July 2022. Next, national export increased by 38%. Besides that, foreign and retail investment current value now is more than 8 billion ringgit. The last one is national inflation under control, which is our inflation rate is 2.8% for the first 7 months 2022. Next slide. So, this is also the current issue. On the 8th September 2022, Bank Negara Malaysia, which is Monetary Policy Committee MPC, has raised its overnight policy rate by 25 basis points to 2.5%, in line with expectation for further normalization of monetary policy as the country economy grows and inflation gain momentum. So what is OPR? So OPR is an overnight interest rate set by our central bank, Bank Negara Malaysia, that determine the rate of interest of financial institutions that lend each other money overnight. For now, the ceiling and floor rates of the OPR's corridor are correspondingly increased to 2.75% and 2.25% respectively, according to a statement by the central bank. With the positive growth prospect for the Malaysian economy remaining intact, the MPC decided to further adjust the degree of monetary accommodation. At the current OPR level, the stand of monetary policy continues to remain accommodative and supportive of economic growth. We can see that labour market condition and income prospect remain positive, with unemployment and underemployment declining further. So the reopening of international border will lift tourism-related sectors. Investment activity and prospect would be supported by the realization of multi-years project. So this is the OPR that change already announced. We can see from the 22 January 2020, the OPR was cut by 25 BF to 2.7%. And then we can see it increasingly lah. January, March, May, July, May, and July 2022. Next. So this is the graph. It's more easy to see from the graph. From the graph, we can see that the MPC raised OPR in May for the first time in 2 years after maintaining the benchmark interest rate at historical low of 1.75% since July 2020 to cushion the economic impact of the pandemic. The latest one on 8 September, BNM raises OPR by 25 BPS to 2.5 on 8 September 2022. That's all from me.
Yeah, thank you
I
very
will
much.
pass. I will pass to Fatih.
One more.
Sorry, Doctor.
Yeah,
I will
yeah.
pass to Fatih Masuha to
Okay.
continue this topic about the policies, government, and so on.
Yeah. Just now, you mentioned about the severe impact on COVID-19. I want to mention also, Malaysia managed well to come out from COVID-19. Vaccination program became a successful model for the rest of the world. Malaysia did well to come out from COVID. Okay, go ahead, Fatin. So bear with me. For 2 more minutes to 3 minutes, the rest. Okay, go ahead, Fatin. I have the QR code ready, but go ahead, Fatin. Finish your slide. We are borrowing time.
Doctor, sorry, Fatin terkeluar daripada meeting.
Oh,
Tapi dia try untuk masuk balik.
oh okay.
Maybe hujan kot.
Hujan.
Can you see my screen?
Oh, okay, Fatin, can.
Okay.
Let's start.
Thank you, Iza. I am Fatin and now I will be presenting the effects of COVID-19 towards the Malaysian economy, also the strategies taken by the government in order to revive the people's economy. So, for your information, the government of Malaysia has done several surveys and this is one of them. Here is the result of a survey conducted by the government of Malaysia on the impact of COVID-19 on companies or business firms. The survey
by
was done
DOSM,
on...
not Malaysian, by DOSM. Department of Statistics.
Okay. Here is the survey of a survey conducted by the DOSM on the impact of COVID-19 on companies or business firms. The survey was done on the 10th of April until 1st May 2020. About 4,094 companies or business firms were involved in the survey.
Of course, DOSM is part of government, but it's by DOSM.
Okay. Looking at the impact on companies or business firms, more than half of the respondents, which is equal to 53.4%, stated that they will only be able to survive for 1 to 2 months if paid leave facilities were given to employees during the MCO. During the MCO period, there was 67.8% of respondents stating that there was no source of income during the MCO period, while 12.3% of companies or business firms earn income through online sales or service sales and 9.8% from sales at physical premises. From here, we can conclude that MCO actually benefited them. This study also found that 88.8% of respondents from the Sdn Bhd company category faced issues in the payment of employee wages. On the other hand, individual ownership states that the main challenge is the absence of customers, which is 70.7%, followed by the payment of employee wages, 62.5%. As many as 42.5% of respondents estimate that a period of more than 6 months is required for their company or business firms to return to normal if COVID-19 is successfully contained. Meanwhile, 28.7% of respondents estimate that a period of 4 to 6 months is required, and 1.9% of respondents stated that they will not recover and are expected to be forced to close. A total of 68.9% of respondents used savings as the main source to cover operating costs during the MCO, followed by 90.8% through loans and 11.3% through capital injections. The two main assistance they need are financial aid and a reduction in company taxes. The majority of respondents choose financial assistance or subsidies from the government, which is 83.1%. Next is on Malaysia's GDP growth from the year 2020 to 2021. From the picture shown, in 2020, Malaysia's economy contracted by 5.6% from a growth of 4.4% in 2019 due to the restrictions on economic activity resulting from the containment measures in response to COVID-19 pandemic. The last seen decline in Malaysia's economy was in 2009 with 1.5% drop. The economy downturn of 5.6% in 2020 was the lowest after 1998 at 7.4%. All the 5 main economic sectors registered a contraction parallel with a highly challenging domestic operating environment and lower global demand. Malaysia's GDP in 2020 in current prices stood at RM 1.42 trillion, while in constant prices it was at RM 1.34 trillion. Following the weakened domestic economic activities and the external sector, gross national income per capita has fallen to RM 42,643 from RM 45,311, which was recorded in 2019. And then Malaysia's economy regained its momentum in 2021 with a 3.1% growth from the previous year, negative 5.5. The performance was driven by the services and manufacturing sectors, which constituted 81.3% of the total GDP. Despite Malaysia's gradual economic recovery in 2021, the GDP is still 2.6% lower than the pre-pandemic levels in 2019, with an 37.2 billion ringgit decrease. The drop was due to the contractions in all major economic sectors except manufacturing, which recovered 6.6% from the 2019 economic level. Malaysia's GDP at current prices was RM 1.55 trillion in 2020, while it was RM 1.39 trillion at constant prices. The gross national income per capita surged to RM 46,051 ringgit. Next, regarding labor force, employed and outside labor force situation from 2020 to 2021. Based on the picture shown, the labor force, which comprised of the employed and unemployed persons, augmented by 0.6% or adding 86.1 thousand persons to record 15.7 million persons higher than previous year, which was 15.6 million persons. Nevertheless, unlike the pre-crisis period, the increase in labor force during the year was attributed by a rising number in unemployed while employment was declined. Following of the uncertainty of labor market during the year, it was found that some of the labor force has moved into inactivity, whereby number of outside labor force went up by 1.7% to record 7.2 million persons in 2020, then 7.1 million persons in the previous year.
Okay. We have to
Hence,
shorten. Now you have to move to the measures, the langkah-langkah taken by the government. You just mention it. What?
okay.
Permai, Perkasa, all this. Just mention it, the name only. Because I'm so sorry, we have no time already. So we have, this is waktu kecederaan.
Okay.
We take 5
Doctor,
more minutes.
actually,
Okay.
under this slide, we have the government initiative for the employment, but do you want this? Do you want me to
Yeah, just
explain
mention.
this or
Yeah,
the
just
previous
quickly
one?
mention.
This one. Okay.
Yeah, the program to come
Okay.
out from this COVID.
Okay. Please. Okay. These are the strategies taken by the government of Malaysia to revive the economy. Firstly, Prihatin. On 27 March 2020, Tan Sri Muhyiddin Yassin announced the People's Economic Stimulus Package, which is Prihatin, worth RM 250 billion. This package was then followed by Prihatin Tambahan amounting to 10 billion ringgit to help ease the financial burden of small and medium enterprises, SMEs. Among the benefits received by the people to Prihatin Nasional are RM 1,600 to household with a monthly income of less than 4,000 ringgit, RM 1,000 to household with a monthly income of less than 4,001 ringgit to 8,000 ringgit, and then 200 ringgit one-off payment to students of higher education institutions, and various other benefits under the scheme. Secondly, Penjana. On June 5, 2020, the government announced the Pelan Jana Semula Ekonomi Negara, which is Penjana, which it focuses on three cores, namely empower the people, boost business, stimulate the economy. In the first core, which is to empower the people, is wage subsidy program extended for 3 months, improvement of the National Employment Service Portal under SOCSO, incentives of 600 ringgit to 1,000 ringgit for 6 months to employers who provide jobs to the unemployed and industrial trainees, and many more. Next, the second core, which is to boost business, begins to contain the following initiatives. The first one, encourage micro enterprises and small and medium enterprises in e-commerce, Shop Malaysia online program, 700 million ringgit grant and loan assistance, and many more. And lastly, the third core. Under this core, among the government's initiatives are the RM 600 million ringgit Penjana National Fund drives business digitization and innovation. Second, create a national technology and innovation sandbox with an allocation of 100 million ringgit. And the third one, improvement of the digitization of the government service delivery system, and many more. The next plan is Permai. Permai was launched on 18 January 2021 by the 8th Prime Minister. Permai Assistance worth 50 billion ringgit contains 22 initiatives, and there are 3 goals. The 3 goals are fight the COVID-19 epidemic, preserve the welfare of the people, support business continuity. And the initiative are lump sum grant of 500 ringgit to all health frontline workers, RM 300 ringgit to other frontline workers, vaccine procurement transparency. The national immunization program is given primary attention through a special committee to guarantee access to COVID-19 vaccine supplies. And the third one is the government added more than 3,500 health workers who will be on duty at the end of January with an allocation of 150 million ringgit and many more. Fourth, Pemulih. For this assistance, the government has allocated about 4.6 billion to be distributed to more than 11 million households, including single individuals and the elderly. Fifth, Pemerkasa. This aid has been introduced to help P40 group who are still affected during the MCO who are aged 21 to 60 years. This special assistance of 500 ringgit will be given to recipients of Bantuan Perhatian Rakyat who earn RM 1,000 and below, and also those who have lost their cost of living. The government has also announced an increase in e-wallet credit assistance to RM 150 ringgit from 100 ringgit previously. Sixth, Tourism Recovery Plan 2022. The Ministry of Tourism, Arts and Culture MOTAC through Tourism Malaysia has launched the Tourism Recovery Plan 2022 for the accommodation cluster in an effort to boost domestic tourism as it transitions to the endemic phase. It is the continuation of the Economic Stimulus Package 1.0. Under this plan, an estimated 33,800 TT Malaysians have the opportunity to redeem e-vouchers worth between RM 50 to RM 100 through the purchase of hotel accommodation online from July 15 to December 31, 2022. And lastly, Keluarga Malaysia Price Control and Festive Season Price Control Schemes. Under these schemes, goods where prices are controlled include sugar, wet flour for general use, cooking oil in 1 kg packets, chicken and eggs, as well as 195 petrol and diesel. That's all. Thank you for listening.
Thank you very much for the presentation. And overall, I'm so happy. I'm so happy. You've got the understanding of the concept. When you talk about GDP growth year on year and so on. Alhamdulillah, after I explained to you, quarter to quarter this year compared with quarter previous year, you got the concept right when you explain the table. These are the things, not explaining the table one by one, but what comes out from that table. I think I'm so glad with all your presentation, and thank you. Congratulations to you all. And then please stop the recording, and I'm gonna put the slide, the QR code right now. Thank you. Congratulations to all. I really I'm happy with you all.
Thank you, Doctor.
Yeah. Okay, now the slide, the QR code. QR code. I'm sorry for the time, curi time, using the masa kecederaan. Now the QR code. Alhamdulillah, finally finished. Then we discuss the rest in our Telegram.
Thank you, Doctor. Have a good day.
Yes, you too. Alhamdulillah, you all done with your presentation now. Your video individual. You don't have to present the video, of course. Just submit to me.
Doctor,
Yes.
about the individual video, what should we do actually? We have to choose topic from what? Performa or I don't know.
Okay, I will give the some of the topics to you on the Telegram, because in the beginning I said the topic should be open to you, but I think I should give guide to you.
Yeah, I think so.
Yeah, all right. And it's not due now. Due after you finish all your exam. You understand? I want you to focus on your exam. Your other class exam.
Doctor, the exam, is it okay if I only read the lecture notes since I don't buy any books for this course?
Yeah, fine.
So,
yeah.
Okay.
Yeah.
Thank you, Doctor.
You're welcome.
Thank you, Doctor.
You're welcome.
Thank you, Doctor.
You're welcome. Make sure you take your time for Dhuhr quickly.
Thank you, Doctor.